We had a rough day in markets today. There's no two ways about it. We were down a couple hundred points on the Dow, and we were down across all major indexes. Crypto was down. It was a general sell-off in risk assets, and some of our positions fared very poorly, unfortunately. This was a bad Santa moment, right? It's like the movie Bad Santa when kids expect to be on a nice Santa Claus and they find a sort of drunken curmudgeon, right? It's a great holiday movie if you haven't seen it. Um, so volatility interrupted the would-be Santa rally today. Doesn't mean it's over, right? We have 3 more sessions. We have one session tomorrow, and then the first 2 sessions of 2025 are included in the Santa Claus rally period. But if the Santa Claus rally doesn't come, we may be in trouble. If Santa Claus should fail to call, bears may come to Broad Wall. Yale Hirsch, the guy who identified the Santa Claus rally, and he is bringing up another historical precedent here, which is if the Santa Claus rally does not come, it could indicate a bear market or some weakness ahead. All right, I think what we witnessed today is what's called volatility clustering. Periods of high volatility are followed by periods of high volatility. And we have to remember that most volatility models, which can be self-fulfilling at times, they assume that volatility will be like volatility just was, right? So I know that sounds complicated, but it's not. It just means that the most volatility models assume that volatility will be like it just was. And sometimes it is. Volatility tends to cluster. And I think that's what we saw today. We saw another VIX spike today. Although one thing to keep in mind is that given the strength of the 1224 rally, there's a very high chance that the Santa Claus rally still materializes, historically speaking. I mean, even with today's losses, since we recovered some of the initial carnage, we might be able to recover it and still claim a Santa Claus rally. Remember, the average Santa Claus rally is only about 1.3%. So it's not a huge thing to reclaim in the next couple trading sessions. Remember that before we have the sell-off today, this is where the year's winners were, right? We have massive gains in companies like Nvidia, Broadcom, Apple, Google, Meta, Netflix, Costco, Tesla. It's across the board. Even Cisco, Booking. So Palantir obviously has had quite a year, 360%. So remember that this little sell-off is, it's in the context of what's gone on this year, it's really a minor drop in the bucket. The VIX ended considerably lower than it was earlier in the day. It spiked into the 19 handle. I have a picture of it in the 18 handle, but it spiked even higher than that. As you can see, this is about where it ended, which was lower, and then around 3 in the day, it got even lower, back to the 16 handle. So there was some characteristics of this VIX spike which make me think it was probably temporary, part of a volatility clustering, and not indicative of a reversal in the momentum of markets that's generally bullish. This is one of the things that tells me that. As you can see, the VIX just didn't invert. The shape of the curve remained intact. Yes, it went up, as you can see, but it didn't even go up that much. So at the end of the day, the VIX spike wasn't that consequential today, and we expect to see it reverse, although it could stay up at these levels for the end of December. That would actually tend to match the historic pattern of December. So we'll see what happens. I'm still gonna hold out faith and believe in a Santa Claus rally, because I think that, with the VIX not inverted and the seasonal tailwinds still in place, we might get some buying tomorrow, just like we got some buying today off the worst levels and ended significantly higher than the lowest levels of the day. I also want to point out something about small caps. Small caps have performed very well over the last month, over 10%, and that bodes well for them in the future. And if small caps are doing well, the rest of the market is doing well generally. So, I just wanted to point that out. That's one thing that one of my favorite analysts, Seth Golden, pointed out. And I think there's still a lot of tailwinds in the market. Not a lot of fundamentals have changed. There's been some fear. There's been a few questionable economic numbers, like in consumer sentiment and stuff like that, some unanticipated drops. But generally, the fundamental backdrop of the market remains strong. GDP is high. The consumer is strong. They're starting to lean on credit, which is a good thing. It's going to fuel further consumption. And, generally, I think going into January, we're pretty well positioned. We had an incredibly strong November, and some of the weakness and give back in December was probably likely inevitable, given how strong November was. But I still hold out faith for a Santa Claus rally, and hopefully we'll be having better news than we had today over the next few trading sessions. Thanks for being subscribers to Punk Rock Traders, and we'll talk to you soon.